Hello to all traders and welcome back to another market review brought to you by Orbex. The big news coming out of the American economy yesterday was the CPI data, and year on year it's looking very progressive after the consensus was in at 5.2%, but it actually came in at 5%, so 1 percentage point drop there. And we're looking at the ninth consecutive decline in inflation in America. So it's looking very good, especially with the progressive job numbers we've seen for the NFP. So where does this leave the Fed and its next rate hike? Well, the consensus is that it's going to be 25 basis points again. It doesn't look like the Fed are going to slow up on this rate hikes anytime soon because they want to get down to this magical 2% inflation by the end of the year. Will it happen? Are we going to head for a recession by the end of this year? And what is Janet Yellen saying for the next few months as well? Well, we're just looking on the charts at the moment to see where the next progression is and where the next signals are. So we're looking at gold today again because we saw such a big move, big fluctuation before it settled and plateaued. So it did spring into life at the news event release. However, it does seem to be back on track to where it started in yesterday's session. But more importantly, we've cracked the $2,000 handle a few sessions ago. It hasn't really had any likelihood that we will start crashing below that towards the 1950 handle anytime soon. But I just wanted to point out on the chart today the last time that we were at this particular area was, when we had this big spike, and this was obviously when the unfortunate Ukraine-Russia conflict did begin. But since then, we've seen this vast V-shaped recovery in gold, and it's looking likely that now, because of the levels we're at the moment, it's looking likely we'll see a bit of consolidation before we get the next signal to the upside or downside. But more interestingly enough, if we look on the 4-hour chart, we're just seeing now possibly what could be quite a sharp bearish divergence because prices were steadily increasing here. And I'll just remove the rest of the drawings just so it's a little bit easy to see. But we are seeing what is likely, as I said, this divergence that could bring prices a little bit lower. So, with that being said, with this $2,000 line being hit a couple of times and being tested, just zoom in so it's a little bit easy to see, being tested here, we're just seeing now a small V-shaped recovery forming. But the likelihood is we're going to get some firm resistance roughly at the 2025, 2026 area before we get the next signal. We're just a few dollars shy off of that mark at the moment, but we are expecting another test to the upside in the next couple of trading days. Obviously, we've got another trading day before the end of the week, and supposedly the banking crisis is over. But again, we'll have to wait and see and what the repercussions are of that, if any. But at the moment, we're just waiting for the next Fed meeting, which is next month, and we'll see when the next what the next rate hike will be as well. But as I said, consensus is that 25 basis points is something that we're looking at as well. So just looking at the DXY as well, from the last time we looked at it, we did see this descending bias for the dollar, and it. Even though we had a little bit of a pickup when there was supposed to be a slight revival in the dollar in the last few trading sessions, obviously we have been brought down now, back down to earth quite significantly. So this, has a fully fledged bearish channel. We don't seem to be really getting out of it anytime soon. And the consensus is that if we look at the pattern emerging at the moment with always channels, we always look for a breakout. Obviously, we've had a small false break here before we were sucked back into the dollar bullet bearish channel, but now we're expecting another decline, and if we fall past this mid 101 area, then we could start testing the $100 area once again, and this will be quite significant for the dollar. But obviously the fundamentals are really driving this price action at the moment, and we're just waiting to see what the next move is going to be. So let's all see for the next few training sessions where gold is heading. As usual, this video will be posted on our YouTube and Telegram channel, so please feel free to tell us what you think, what you're trading on, and we'll see what's happening then. So thank you very much for joining me, and we'll speak again soon. Bye for now.